Welcome to this episode of Looking Ahead. Today we explore regulatory trends and areas where the law is shifting, all to help corporate boards get smarter, faster. I'm your host, Al Dominic, and I'm joined on set by Ed Knight, the Executive Vice President and Global Chief Legal and Policy Officer at NASDAQ, and Melissa Sawyer, a partner and the co-head of Sullivan & Cromwell's Corporate Governance and Activism Practice. Over the next few minutes, the three of us will hit on issues that bring words like culture, cyber, privacy, regulation, and antitrust to life. As you can see, we're in New York City at NASDAQ's market site in Times Square. The bright lights behind me serve as a visual reminder that focusing one's attention can sometimes be easier said than done. So it's my task to tee up a topic and let Ed and Melissa subsequently share their expertise for your benefit. Ed, as this is something of a primer on regulatory trends, let's start by talking about those issues that cut across industries that you feel board members of publicly traded companies should focus on right now.
Well, first, Al and Melissa, welcome to NASDAQ. We're very happy to host you here. We want you to come back. We want everyone who's watching when they're in New York City to come to the NASDAQ market site and see the economy in action. Boards, what are they worried about? What should they focus on? One word I would focus on is risk. They are traditionally focus on risk, but today it is more of a watchword than ever before. And so companies should particularly, I think, focus on where the law is changing, where it's dynamic, where there aren't safe harbors already in existence, and where there's a high degree of risk. Let me just name a couple of areas. One, privacy. Of course, that is a topic that is sweeping the world economy in terms of what are the rules of the road. You have Europe with the GDPR law, which has revolutionized the way we look at data, and you have the state of California, which has a law. You have 20 other states looking at new laws here. There isn't consistency. Today, the Irish Privacy Authority will be issuing a decision with regard to Facebook. We'll have to look at that. It will change the law. And so privacy is a key area. Another area is the whole area of economic sanctions, where the U.S. government is very aggressive. There's no room for error. You have to be very careful when you're doing business overseas. That applies equally to areas like the Foreign Corrupt Practices Act. So those are just a couple of areas where the law is changing, where risk is high.
Sure. Well, you're talking about some things that are endemic to what happens in the U.S. and then also outside of the country. I'd like to ask Melissa for her opinions on what's happening with the SEC right now in terms of approach to regulation and maybe the enforcement actions on publicly traded companies. Are there some areas getting more attention than others?
Yeah, absolutely. It's interesting because I think people thought there would be more change under the current administration, and the change has been really incremental. But if you look back about 10 years, the SEC used to use an approach to enforcement that they called broken windows, where they would really go after and sort of scatter their resources across a wide range of instances of non-compliance, regardless of how big or how small they were, on the theory that by pursuing all the smaller items, they might be able to foster a better overall culture of compliance for companies. They still do that to some degree. We've seen that sort of activity, that active enforcement of smaller violations in relation to things like the SEC's rules and regulations around the use of non-GAAP financial measures. On the other hand, though, we do see them honing in a little bit more and really throwing more oomph behind enforcement actions around things that have really exploited retail investors, the mom and pop investors. And a good example of that is the swift and decisive action that the SEC took when there were a bunch of companies around doing initial coin offerings, cryptocurrencies. And the SEC said, no, let's put the brakes on that and make sure that these investors are getting the same disclosure about risk that they would get with any other type of security.
Sure. No, the cryptocurrency stuff is crazy to focus on. We could certainly go down that rabbit hole, but I'm going to pause myself and ask Ed if he'd like to build on what Melissa just said. Where are you seeing the SEC focusing its resources right now?
Well, Melissa's an excellent person to have here because the current chairman of the SEC is a former partner of hers from Sullivan & Cromwell, Jay Clayton. And he has brought what I would call a very rigorous focus on the traditional areas of enforcement at the SEC, focusing on disclosure requirements and the rigor around this, focusing on registration of securities and other things that have to be registered at the SEC, and on the integrity of the markets and the trading in the markets, dark pools, and other things that are more lightly regulated, making sure investors are being protected. He takes very seriously the issue of, as he should, of protecting individual investors. At the same time, he's trying to modernize regulation. He's looking at the plumbing of the proxy process, for instance, which I would call 19th century in many respects. It doesn't use the modern forms of technology that you see all around here at NASDAQ. And I think there is a consensus that we need to move that into the 21st century. So he's very focused on that.
Yeah. Well, it's interesting. I, early in my career, had a chance to work for the former chairman of the FDIC, and so I was party to some of the more interesting conversations about regulatory behavior and the changing landscape. Unfortunately, I'm not as familiar with what's happening right now. Maybe you could talk a little bit about the current regulatory environment, given your vantage point, maybe vis-a-vis engagement with investors?
You know, what's interesting about that is a lot of the activity around investor engagement is actually driven by market forces and not by regulation. If anything, there's kind of a void in regulatory activity in that area. The market forces have been so dynamic. We've got, you know, about 20% of the S&P 500 shares that are held by just 4 passive funds, and then you've got a group of really forthright, active managers coupled with a lot of really aggressive shareholder activists. When you put all of that together, we see a picture of companies being incredibly responsive to investors, but without a lot of input from regulators around what they should be doing or not doing. That being said, Ed's right. The SEC is considering some reforms to that process. They are looking at proxy plumbing. They, by all accounts, are considering limiting the number of shareholder proposals that get submitted for consideration at companies. They're looking at some issues like universal ballots, a perennial topic on the SEC calendar for consideration is the 13D disclosure regulations. I continue to think, though, that in addition to regulation, technological change really will drive a lot of what happens in that space. We've seen virtual shareholder meetings become much more popular in the last few years because the technology for hosting those finally works well. I think when we're able to implement blockchain technology with distributed ledgers to track share ownership, that's really going to change the way that companies interact with their shareholders because they'll have a lot more visibility into who their shareholders are.
Yeah. Well, you're giving us a lot of thoughts, and my mind's going in a few different directions, so I'll try to bring it over to the antitrust side because I mentioned we're going to touch on a few different issues quickly today. You know, maybe, Ed, you could share a little bit about antitrust and what's happening.
Well, another way to think about antitrust is that it's a form of regulation, and that for all public companies, you have to have a compliance program in that area to educate employees around what I'd call the traditional areas of focus by the regulators and by the competition authorities. Things like price fixing. When there are conferences and you are at a conference with your competitor, you've got to be careful about how you communicate them and what you communicate to them about, and not to talk about pricing and avoid those issues. But there's the whole other area of oversight of mergers and acquisitions. And traditionally in a Republican administration, you would see more of a, if you will, deregulatory approach towards that. And, but this administration has been focused on unique theories, if you will, including so-called vertical combinations, the AT&T Time Warner combination that they looked at. So it's made it a difficult time for antitrust lawyers to advise boards and predict what the Justice Department or the FTC is doing. Yep. I would say it's antitrust law infused with some populism, concern about individual customers and consumers. And so you've seen recent moves to look at large technology companies from that perspective and how they're using their market power. So that's more of a regulatory approach, even though we're dealing with a Republican administration that is deregulating in a lot of other areas.
Sure. Well, you talk about some of the challenges attorneys face. You know, a number of companies face challenges that relate to cyber. I know we touched on a few of those already. But talk to me about the treatment of I don't know, let's say data and, basically privacy issues. Ed mentioned what's happening in Europe. It's coming to the US if it's not already here.
I don't think we've even scratched the surface of potential regulation of data privacy issues in the States yet. Europe has been ahead of us on this issue for quite a while now. Ed talked about antitrust, for example. Certainly, I think the antitrust regulators are going to take an interest in potential monopoly power associated with owning data. I think it's only a matter of time until a large e-commerce company tries to license off data that it has accessed by virtue of its primary business of selling goods and services online. And when that deal is a multi-billion-dollar deal, I think it's going to raise a lot of questions for people about who really owns that data and who has the right to monetize it. Is it the consumers about whom the data relates, or is it the company that stored the data just by happenstance through their regular business? I think it's going to be a very challenging area. It's going to create a lot of work for lawyers.
Yeah. Well, and you can start to pull that string. It's not just the vendor, but it's the vendor's vendor, and you just keep going down the road, and you realize how interconnected we really are. I guess that's a nice segue to Ed to talk about some of the industries that form this tapestry of the global economy. Are there specific industries right now getting more regulatory attention or focus, for lack of a better way of describing it, than others?
Well, I think there is a little bit of what I would call a hangover amongst regulators and policymakers about some of the hands-off approach they took with emerging technologies that were disruptive. And so the United States became a place where you could be disruptive and you could try new technologies. You could, if you will, break things. And now I think you see members of Congress, members of the European Parliament, looking very carefully at the emergence of new technologies and how they want to regulate them. So I think if you're working on a new technology that you think is going to be very disruptive and you think you have an open playing field, you need to think twice. Sure. Because people are taking the lessons they think they've learned from the last 20 years in dealing with new and emerging technology and applying them and saying, we need to understand this better. A lot of Congress, for instance, right now, and their staff is going back to school at Georgetown this week, where they're having a session on technology just for Congress and the staff to educate them on that. There's tremendous interest in that.
Well, I mean, we are living in interesting times. So if I ask you to flip your positions, which consume so much of your day-to-day, activities, and think if I was on the board of a public company, what would I be watching for? What should I be watching for? You each bring different perspectives. So Ed, if you were sitting on a public company board, regulatory landscape in the upcoming year, where are you focusing your time?
I've long said I somewhat practice law out of the newspaper. Okay, I'm looking for emerging issues. I'm looking for trying to look around the corner, and I think you really have to keep your eye on those new developments because the law and compliance and regulation can change overnight. And there is unfortunately often a practice of regulators and enforcement authorities of using enforcement actions to make new law. They're not supposed to do that, but they do it, and you have to be mindful that this has happened to this company in our space. So the standards have changed overnight. So you have to be very in touch with firms like Sullivan and Cromwell and the rest who can tell you what is emerging that you need to be on top of.
Sure. So Melissa, you're now on the board of XYZ public company that's doing well, but you have a fiduciary responsibility. You've got a board perspective that's informed by your past legal experience. What are you paying attention to over the next 12 months?
So your question is actually really interesting because it presupposes that directors are responsible for predicting the regulatory landscapes that are going to apply to their companies on which they serve on the boards of. And I think that's true to some degree, but it's actually a very hot topic right now, the question of what to what degree directors need to involve themselves in day-to-day questions of regulatory compliance. There was actually just a case that came out a couple months ago that suggested that directors could bear personal liability if they fail to properly oversee a company's regulatory compliance. And I think that has really spooked a lot of directors and could even chill people from wanting to serve as directors of public companies. Now, the facts of that case were pretty egregious, and what I've been telling my clients is, look, there's really no one-size-fits-all approach on these issues. So that case doesn't mean that you need to run out and necessarily form a risk committee where you spend hours and hours of your time looking just at regulatory compliance issues. But I think it does mean that directors should have on their board agenda in the next year as a discussion topic the question of what is the regulatory landscape for this company, and have we allocated the right resources to considering these issues?
Great point. Ed and Melissa, I appreciate you looking ahead with us today. I'm Al Dominic, and thanks for watching.